Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, Mr. Michael Becker.
Hey, Paul.
How are you, Michael?
Doing well.
How's everything going with you?
Good. Excited. It's officially last call for the Old Capital Conference, September 13th. So as this airs, it'll be a few days away from the first time it airs. And our guest on the podcast today is going to be at the event. So excited for my listing broker panel and to hear Roger Staubach speak.
Yeah, it's you're going to be blown away if you have the opportunity to attend the event and see the AT&T Stadium. You know, we're going to be up in the stands, and we're using that big monitor as our PowerPoint presentation. So it's going to be unbelievable. So we're excited for anybody that is in the multifamily business that wants to learn a little bit more. But it's really a networking conference, and that's probably the biggest thing, is really networking with folks that can help you get to where you want to go. So talking about people that have gotten someplace, I want to kind of introduce in the podcast here a friend of ours, friend of the shows, that we've known for a while, that we think that this gentleman is a high-quality person, and his name is John Ridgway. And John owns apartment buildings down in the Houston area. And what makes John a little unusual is that in 2017, he was the National Apartment Association winner of properties under 150 units and that were older than 20 years. So just kind of right in our sweet spot of what we do for buying apartment buildings. So this is the guy that really kind of understands that marketplace. And I kind of want to talk a little bit about how he got into real estate. So John, thanks for coming on to the Old Capital Podcast. We appreciate that.
Hey, thanks for having me.
So tell us a little bit about, you getting into the apartment business. But before that, how did you get into real estate?
Well, I've been in real estate and the apartment business for over 30 years. I began my career as a property manager working on site. I started right here in the Dallas-Fort Worth area at a property over I-30 in Ferguson area back in the mid to early 80s. And kind of a funny story, I actually started in the business with a turnkey company. A buddy of mine and I, we were cleaning apartments. Matter of fact, one of our first clients back in the day was SBC. And for you guys that don't know, the S stands for Staubach. That was when he first got into the business. And so we were cleaning apartments, painting apartments, carpet shampoo, those types of things. And I got hired as a leasing agent by one of my clients at this property over there on Ferguson Road.
So that was kind of an interesting area back, say, 30 some years ago. It's still an interesting area right now, Michael.
Definitely challenging. Back then, it was also right around the corner from all the Faulkner stuff on the I-30 corridor and the S&L crisis and all the apartments they threw up there back in the 80s. So I'm sure that was a interesting time to live through. So you started out kind of cleaning apartments. How did you make your transition now? You like Paul mentioned, you're the National Apartment Association winner for Property of the Year last year. So how did you go from cleaning apartments, making them ready to that?
It's been an interesting 30 years, but like I said, one of my clients that we were cleaning for hired me as a leasing agent. So when I actually got into the property management business, I started on-site leasing apartments. Over the ensuing years, I've worked for several different companies, worked up to assistant manager, district manager, and then regional vice president. And so I've always been hands-on in the industry. And the interesting thing about it is, because your question was, how long have I been in real estate? And it's been a long time, but I was always on the property management side. I was an employee. I was never the owner. And over the years, I made a lot of the clients that we worked for and the companies that I worked for a lot of money. And don't get me wrong, I was paid well. It's a good business to be in. I worked for some great companies, awesome people, but realized, probably 14 years ago that being an employee does not create the wealth and the passive streams of income that I wanted for my family.
So when you were overseeing these apartment buildings, how many total units at the height did you manage?
Yeah, at one point I was just under 11,000 units and spread across 5 states.
That's a lot. A lot of units and a lot of people reporting up to you. So that was a lot of things that you had to oversee and be on top of.
So my background, similar but different. I was a banker making loans to other people. Very similar impression where I'm making a good living, but watching all these other people get rich that are my clients. So how were you able to make that jump? You know, that's the hard thing for a lot of people that are employees, in particular the people that are vendors in the business. We go from the surety of the paycheck to, you know, being a principal in these deals and taking on the risk. What was kind of your moment, your threshold moment where you said, damn it, I'm sick of watching all these people make all this money. I got to go out and do it on my own. Was there like a moment in time that you remember that kind of flipped the switch for you?
Yes, there is. It was in 2004, and the company I was with was promoting the employees to sign up for the 401k program because the highly compensated individuals were contributing more than was allowed compared to the other 90%. So the edict came down from on high of got to get more employees signed up for the 401k. I was a regional vice president in the Houston market for this company and was, speed of the leader. You sit through all the presentations. And so during this day, we had 8 presentations scheduled so that we could stagger the crews in and out. And I got nominated and told I would sit through all 8 so that every group of employees that came through saw me sitting there nodding my head yes, and rah. And so when you start hearing that same presentation 8 times, I started to see the fallacy of the 401k and what they were selling. What it wasn't the reality, and there were just a lot of points of it. And so it was at that point that I realized that the path that I was on, again, making good money, good salary. I got my, 2.3% raise every year, occasionally got a good bonus, but that I just couldn't get to where we wanted to go. But I didn't know where to go. I knew I was not on the right path, but I really didn't have the map to get to where I wanted to go. It was probably, I worked at a couple of different things in that time period. In 2007, I was at a National Apartment Association event in Washington, D.C., and met Del Walmsley, the founder of Lifestyles Unlimited. And I did not know who Del was. I had not heard his show. We got paired together, and this is the event on Capitol Hill where one of the days there's congressional office to congressional office. And so we got to spend the day together and just got talking. I realized what he did, and so I was picking his brain all day because it's like, I know property ownership. Being on the ownership side is the way to do it, but I don't know how to achieve that. And so that was the start of that. Was the aha moment in 2004 that took me to about 2007 to kind of start finding the answers of what is the map, what is the path, how do you do that?
So what is the map and what is the path? Do you quit your job first and then start to invest in single family and then work yourself up to multifamily? How did you do it?
So kind of a funny story is that, so I joined Lifestyles Unlimited as a member, had a property under contract, was working for a property management company. And the thought was, as soon as I close on this property, then I can make the jump. I'll manage the property with the management fee. So that would be my income. And so had the deal put together. And frankly, I got cold feet because it was, just what you were talking about, Michael. It was, can I really make that jump? And was hesitating. And so as Del was mentoring me, we were having these conversations, and he said, just manage it through your property management company until you can build some up. And I was mentally going through the process of, because we all sign non-competes, wow, if I put this property in,
take it out.
Can I get it back out? And I was scratching my head and trying to figure that out. And my boss flew down from Dallas and laid me off.
Really?
Yes. And so it was
Did he have any idea that you were trying to
No.
buy a property?
No.
It was just the time of the cycle that you were a statistic and you were out.
Yes, and it was they combined the San Antonio office with the Houston office. He said, it's just the size.
So you weren't in control of your destiny. Somebody else was in control of your destiny.
Always, yeah.
Wow.
Yeah. And it was and I've gone through that. I think like a lot of us in corporate America at different times have gone through that. Matter of fact, my Uber driver from the airport over here today, I was asking him, do you do this full time? And he's like, well, I do now because I got laid off. And it's a fact of life that a lot of us have lived through in corporate America.
So what was your first building? How big was that?
So the first property was 256 units.
That was out of the box?
That was right out of the box.
Wow.
Where was that at age, and do you remember what you paid for it?
It was a 1978 construction, and we got that for $19,000 a unit.
And that was in Houston?
It is in Houston, yes.
Yeah, a little different today, I'm sure.
Yeah. So that was in very early 2009.
Okay.
So closed on it in very early 2009. And so this was an acquisition that, so if you go back to the fall of 2008, you had two events. One was a hurricane in Houston, and then the financial, or what I'd call now the lending crisis, not so much a financial crisis. So it was very interesting times at that point because, frankly, there were very few buyers in the market.
So what gave you the confidence that you were able to go out and take on a 250 plus unit deal in the worst recession right after a hurricane in Houston, Texas? What gave you the confidence, and how were you able to get the capital and the debt, if you had debt, and how did you put the deal together?
Yeah, that's a very interesting question. I think the confidence comes from education and knowledge. And by that time, I was a member of Lifestyles Unlimited and had gone through the education. Dell was actually still mentoring back then, and Dell was a integral part of that deal. There were investors that were still ready to invest. And so, one of the differences we saw at that point was by the time you got to early 2009, it was, 65% loan to value.
Right.
The 80% with, 10% mezz was, that was all gone. And it was 65 if we really liked the deal.
Yeah.
So it was a good time to be a buyer because it was a different environment than it is today just because of the competition.
Yeah, what I find is that people that are successful in this business are problem solvers. And so did you partner up with other folks to do maybe a syndication to bring people's money together? Because I
did not have that yet, correct. And so this was a syndication. We had about 25 families were in this particular investment.
What do you think the value is of partners like that? I mean, we can't do these deals without partners. So the value of partners makes other people successful. So would you agree with that?
Absolutely. I really do, because it's twofold. Number one, it allows me the ability to purchase properties to realize my goal of being able to be on the ownership side. And at the same time, then there's 25 families in this particular deal that are also able to start realizing that exact same dream, following the same map. We're just a little bit different, difference between a syndicator or the lead investor and the passives, but they're on that same path as well.
I just had a conversation just more than 15, 20 minutes ago from a gentleman here in the Fort Worth area that had $150,000, $200,000 that he wanted to put into a deal. He wanted to actually build an apartment building. And he wanted to build like 10 or 15 doors. And I was kind of going through the math of the deal. Land's going to cost X. Going up with the new construction, with labor and with materials, it's going to cost Y. And if you have only, say, $200,000 to put into a deal, it's just not going to work. You don't have enough equity or enough liquidity to help yourself get into it. But I said probably if you still want to be into real estate, your best idea is to put the money into a transaction with somebody else. kind of form a syndication, a partnership that you put your money in, this person puts their money in, and you form kind of a team to buy and to manage and hold this property. And so like your transaction right out of the box, I mean, you definitely helped a lot of other people acquire the property since they didn't have enough money to pay for it themselves and you didn't have enough money, but having that team approach. So I definitely think partners are hugely valuable. And then trying to get those partners in through networking. Talk a little bit about networking, of doing stuff. Also like maybe like the Old Capital Multifamily Conference, which is really a networking activity of meeting other people to help you get where you want to go.
Mm-hmm. Well, networking is an integral part of it because you, as a lead investor, I have to meet passive investors. Right. And, because of the SEC exemptions, these are private placements, so we're not advertising. We're not, we can't stand up and just put on Facebook of, hey, come one, come all. Yeah. There are some restrictions on what we can do. So we have to have that personal relationship with our investors. And so networking, whether it is at events at Lifestyles Unlimited, whether it's at events such as the Old Capital Conference that's coming up, meeting people is really the key to the success of what it is that we do. And it's a part of it is the meeting people that have capital that want to invest, but it also gives the passive investors the opportunity to meet lead investors.
Right.
Because that's really the analysis. For a passive, they have to have the education and knowledge of, hey, how do I analyze this guy or gal? How do I analyze the deal that they're presenting to me? Because those are two very different things, but both things really must happen for a passive investor to make an educated decision.
I want to pick your brain a little bit because your background is property management, and I want to talk a little bit about some of your strengths. I mean, you're an owner now, and you've done very well in the last, say, 10 years, but property management is kind of your background, your platform. Talk to me a little bit about what questions people should ask potential property managers, and maybe talk about price, product, promotion, and people.
Yeah, I'm a big believer in the 4 Ps as a basis for operating a property, because any obstacle that you have operationally gets back to one of those 4 things. You're either priced inappropriately, your product isn't in line, you have bad people, or you're advertising to the wrong group if you're advertising at all. Mm-hmm. And so to keep the conversation with your property management company, if you don't manage the property yourself, it's always look for problem resolution. If we're not leasing, why? And if the property performance is not where you think it is, it's going to get back to one of these 4 Ps.
So some of the other things that you've done now, how many properties have you bought? So you bought your first one about 10 years ago. So how many properties have you bought over the last 10 years?
I have bought 8 properties and built a boat and RV storage facility.
I'm sure that's a story for another day. But so you've gone from a vendor in the space. You did your first deal in a tough environment. Now you've repeated that 7 more times. So you had 8 properties. So how have you been able to kind of mold the image of John Ridgway from a property manager to an owner in the marketplace that's taken seriously by the brokers? That's always one of the things that people struggle with when they're first coming out. How do I get credibility with the brokerage community? What are some of the things that you've been successful with by having them, take you more seriously from when you first started out to today?
Yeah, that's a great question. One of the things is that when I first started on the acquisition side was that it was a different time. I'll give you an example. The second property that we purchased was shortly after the first one, but I received a call on Christmas Eve from a broker. And I think in part we got that deal solely because I answered the phone. Yep. And so again, it was a different time. It was a broker, if you would call the old show Night Court. Yep. And, the judge got picked because he was like the 27th guy and just happened to answer the phone. I think his was on New Year's Eve. And we laugh about that because it was on Christmas Eve. And this was an owner that was facing foreclosure. There was a number. It was $13,000 a unit. And if you offer $13,000, that is the number, because that gets them out of it, gets the bank out. It kind of let everybody on that side of the transaction walk away. Put the deal under contract. Again, another heavy, this one was a real heavy turn. It was like 53% occupied at the time of acquisition. But I think, closing those deals, and it's the first deal. And so people that I see, members of Lifestyles Unlimited, dealing with the mentoring team, and we always tell them it's the first deal. You get past that first deal, and the second deal, you then have the credibility.
So what do you advise people that you're talking to that are trying to break into it? What are some of the things that first timers should be doing to get that first elusive deal from awarded by a broker? What are some of the things you see people do well, and what are some of the common pitfalls that you see people make?
Yeah, one of the things that I think for the people that do well is to make sure that your offer is professionally packaged, make sure that you have toured the property, make sure that you ask intelligent questions when you are touring the property with the broker. Stay away from unintelligent questions or something that might set you apart as, man, this guy really doesn't know what he's doing. And so it's the confidence, if when you make the offer, make a complete offer, show your proof of funds that you have. In the Houston market, most of the brokers recognize Lifestyles Unlimited because we've been around, for 28 years. And they understand that a lot of our member buyers as lead investors are going to raise the money in syndication and probably don't have that down payment sitting in the bank. But they also know that our members, the depth of the investor pool, and so that really doesn't become an issue with them because they understand how we're going to do it.
No, you're based out of Houston. Talk a little bit about how is the Houston market doing these days?
The Houston market got a boost from Hurricane Harvey, in part because it took some units offline. It took people out of homes, or people that are out of their homes are renting. So it's a really strong market right now. I think in part that will start to pull back some as people get back into their homes, but it was really a shot in the arm. It's not as strong as the Dallas-Fort Worth market. It's it just continues to skyrocket. But the Houston market is a solid market, stable, good rents.
You've been in the business since the early 80s, and one of the things that we've been kind of talking quite a bit about on the podcast, and some things I've been thinking quite a bit about here lately is, we're 9 years or so, 8-9 years in the cycle. So it's certainly towards I would think we're closer to the end than we were at the beginning. Know exactly how long the economic cycle and the apartment boom is going to keep going. What are some of the things that you're kind of doing now? What are some of the things that you're trying to prepare some members at Lifestyles that you talk to kind of be able to weather all seasons of this business? Because it's a cyclical business. It's not always, trees don't grow to the sky, so we're not going to keep going up forever. So at some point, there's got to be some level of contraction. Who knows exactly how severe that'll be? And so, what are some of the things that you guys have done personally, or that you advise people to do to make sure that they're set up to weather, no matter what comes at them?
I think, to me, one of the most important things that a member or any investor can do at this point in time is look at their leverage and maintain a reasonable, responsible amount of leverage, so that as the market ebbs and flows, that you have room built in that you can withstand that. I also think that what we teach our members is, when you purchase it, fix it. Fix everything that needs to be fixed. Put reserves away so that you have the money to repair it. If I go back and look at in the 2008 when that event happened, we had a lot of members that came through that period really unscathed. And when you look at, so what did they do correctly? And it really gets back to, they were not over leveraged. They used the debt responsibly. They had solid property. So they didn't get into that death spiral of, wow, my margins are so thin. I can't fix this one this month. They let people move into non-made ready units. The good people really don't want to live in those units. Their resident profile goes down a little bit. Then your good residents don't like living next to the people you just moved in, so they move out. It's that downward death spiral. And to avoid that and have the room to be able to weather those storms.
What's your kind of general take on the market right now? I know we always talked about Houston, but what's kind of your general take? Do you still see it as kind of fundamentally strong in all the markets you guys are on, all the major Texas markets? I think you also have a footprint a little bit in Atlanta now, and then maybe some other places. So maybe we kind of talk about some of the markets that you have some level of exposure to, and what's your general impression overall of kind of where we sit today?
Yeah, Lifestyles Unlimited today really we have over 38,000 members currently, coast to coast. Dell is...
That really is amazing. 38,000 real estate members.
Yes.
Wow.
Yes. Dell is currently heard on over 100 radio stations, coast to coast.
And when did he start Lifestyles? How long ago was that?
It's 28 years ago.
Wow.
So 1990.
So he has a long track record. And what I find interesting with Dell is that he's also an investor. So he's not one that just pontificates. He's in the game with his own money, putting transactions together.
Absolutely.
And what I like about Lifestyles too is that it's not Dell that you're putting money into Dell's deals. Dell's putting money into his own deals, so to speak. So Lifestyles is just really an education mentoring group. So I like that.
Yeah, you're absolutely correct. And it is a education and mentoring. Lifestyles Unlimited does not put deals together. We do not participate in the deals as Lifestyles Unlimited is.
Because I've seen a lot of promoters do that, where the only thing they do is that they get a bunch of people that under the advise of education, but they're really just funneling money into their own deals.
Yes. I mean, matter of fact, Michael, you and I were at an event, I think, we're not sure when it was. It was
about 9 months ago.
About 9 months ago, well, plus or minus, out in Las Vegas. And one of the topics at this event was utilizing education to raise capital. I mean, that was the topic, and they were, well-known syndication attorney that put on this event. And so that's not what Lifestyles Unlimited is. There are people like that in the market, but we are not. Lifestyles Unlimited does not put deals together, does not raise capital. We are strictly education and mentoring.
Yeah, I think that's a great point, that there are some promoters out there that are just taking money in under the guise of education, but you guys are just truly helping the individuals invest their own money into transactions, maybe by themselves or with a bunch of people as a syndication to do it. And you guys have had a huge amount of success. In fact, before we going further with Lifestyles, I want to find out, being the 2017 National Apartment Association award winner, what was that like to win that award?
It was incredible. This particular property is one that my investor members and I purchased in 2014. It was a total gut rehab.
How much did you spend on a per door basis?
Just under $20,000.
That's a big rehab.
It is.
Yeah, it's one of those. So we bought this at auction, and we were only able to walk vacant units. So always walk every unit when you buy something. But we were only able to walk 12 of the 52 units. And the 12 vacant were horrible. So the first thing you think of is, hey, if people are living there, they can't be this bad, right? Wrong. They were. So, we wound up, it was not down to the studs because we did save some of the sheetrock, but it's all new cabinets, granite countertops, black appliances, the faux wood vinyl floors, and just completely turned this property around.
Obviously, the seller that lost the deal to foreclosure wasn't putting any money back into the deal. So that's kind of rule number one, is at least Michael's is don't buy in the hood. So I'm hoping your answer in this one is, how was the condition of the submarket around that property?
Yeah, so this was a somewhat of a troubled submarket solely because our property was in it. And so it's a really good location that allowed us to go from a D class property to a B. And so we repositioned this with some newer construction. So ours was built in 72. So we were confined, we have the 8-foot ceilings. There's some functional obsolescence in it that we were really unable to get around. But I placed it finish out wise, rent wise, kind of at the bottom of the B market and the B competitor. So we jumped from a D class to a B class. The lender recognized that. We did a cash out refi at about 135% of our original capital.
It's pretty good officially.
Yes.
So, yeah, that's good. So kind of back question before we kind of went off. So what's kind of your general impression of the state of the market and the markets that you guys have some concentration in? Is there any kind of common things, good or bad, that you're kind of observing out there? And what do you think for the next 12, 24 months? What are you kind of seeing out there?
Right. So in addition to the local Texas markets where we have a strong concentration of members, you mentioned Atlanta. So we have members that have bought in Atlanta, Savannah, Georgia, Jacksonville, Greenville, South Carolina, Sacramento, Phoenix. There's spread around. I mean, what we're seeing in the market, I guess, first is the type of deals. So the type of deals that our members are seeing is really more on a yield play basis. We are finding some value add in the mismanagement of late fees, renewals, loss to lease, those types of things. But it's a seller's market, seems to be that everywhere. And what we mentor our members on is know what you're buying, know where we're at in the cycle, and purchase accordingly.
So you're generally observing most of the people that you interact with are going away a little bit from the value add. It's more closer to yield play, closer to turnkey, maybe some operational improvement, but not the big heavy lift anymore. Is that accurate?
Yes. And so, I would love to do value add, and we occasionally find those in the market, but that's really been picked over. So what we're looking at is and seeing is a lot of yield plays, and again, maybe with some more of a hybrid with some value add component.
As far as yield expectations, internally, kind of what you're seeing, deals that get done here in the recent past relative to 4 or 5 years ago, is there like an IRR kind of variance from what people used to expect 3, 4, 5 years ago to what kind of is acceptable today?
Well, and we focus more on the cash on cash return. Our teaching philosophy is more of a buy and hold, and so we're going to look at the cash on cash on the yield. And so 4 or 5 years ago, you were, it had to be double digits or it wasn't worth doing the deal. I think if you get double digits today, man, you're doing the happy dance. We're seeing a lot of things, a lot of the deals, 7, 8%, even some lower year one. I'd always caution investors against, and measure that cash on cash return compared to the interest-only period. Because a lot of the loans today have some type of interest-only period. And we teach our members, if you're a passive, you really need to understand the interest-only period. How does it impact the returns to the leads, the syndicators? We're telling them you need to very clearly define that, because, what I see in the market is kind of the higher returns, but when you have people getting 4, 5, 6 years of interest only, it might not make the spreadsheet of what happens when that interest only goes away, because a lot of times that 7% becomes 3.5 real quick.
So it's one of the things I've kind of observed here, in particular last year, maybe 18 months. It seems like a lot of the marketplace isn't properly accounting for the risk of some of these deals, and where, in particular with the value add story that, every deal is a value add deal, whether it is or it isn't, when it's being marketed. So kind of what I've seen is the cap rate spread. You go back 5 years ago in Dallas Fort Worth, for example, you could buy a brand new Class A deal for a 5 cap, a B deal is about 6.5, and a C was 8.5, and today it's like 4.5, 5.5, something like that. So the spread used to be 300 or 300 or 400 basis points from the top to the bottom, and now it's 100 or less. So I don't know if I really have a question in there, but are you observing that, or are you getting, someone that's new in this business that doesn't have the benefit of history, that hasn't been in as long as you have, or Paul, I have, that's coming into this business in the last 6 months or 12 months? Are they aware and acute of that kind of history, generally speaking, or how are you guys kind of going about making sure that people pay attention to that?
Yeah, no, it is an important point in that it's in today's market, I think that it's important for investors to have that understanding of what it is you're buying and what you're paying for it. I've been negotiating on a property that the seller has heard it's a seller's market and very much has put his price up there really high. I mean, we're far apart on price because it's just like, I can't get there. And, I think the answer to that is that not every deal works. Some of the best deals I've ever done were the ones I didn't.
Tell me a little bit about taking action today and what makes lifestyles different, because we've talked about lifestyles, but I don't know if we clarified that you not are only an investor in building your own portfolio, but also too is you're teaching. And talk a little bit more about lifestyles for one, and talk a little bit about your teaching, what kind of capacity, using your 30 plus years in property management. Mm-hmm. How do you help these folks?
Yeah. So again, as we stated earlier, Lifestyles Unlimited is an education and mentoring company. And so first off is that we have hundreds of hours of education. We also have internal certification programs. There's a track for passive investors, there's a track for independent rental owners, and then there's a track for lead investors that includes SEC education, the requirements on that. We also teach single family homes. I'm on the multifamily side, but we have a whole educational track for single family. All of our education is delivered online through a program called The Bridge. It is a university level platform that we deliver the education, track the accomplishments, on the certification programs. We do live webinars. There's, like I said, hundreds of hours of education. But I think the part that really sets us apart is our mentoring. And we currently have 10 multifamily mentors that collectively have done over $1 billion worth of transactions over the last 10, 12 years. And this group of mentors we are all investors. All of us except one are what at Lifestyles Unlimited we call lead investors, and I'll talk about that in a minute. But we've all done what it is that our members are trying to do. It is a part-time position. Part of Dell's philosophy is if you join, follow our program, and achieve the financial freedom that you set out to achieve, what I ask for you to do is come back and give back. And that used to be just merely, hey, show up at case study, tell us about your deal, do a road trip. And then he started with the mentors and the mentor program of expanding that. And it's really seen as part of a give back.
For somebody who's not familiar with lifestyles and wants to know a little bit more, what's their first step that they should do to learn a little bit more about you guys?
Yeah. So the first thing I would recommend for someone to do is log on to lifestylesunlimited.com and attend one of the free workshops where we talk about what real estate investing is, our view of real estate investing, which is developing passive streams of income to achieve financial freedom. I mean, that's the base of what Lifestyles Unlimited is.
When you go to one of these case studies, there's not like 10 people in there. There's like 200 or 300 people.
There is. So
the huge amount of momentum that goes behind the case studies, and if you get on board, you get some of the road trips. So you get to to get on properties and smell, feel, and touch some of these Class B and C properties that Lifestyles members invest in. So it's
one of the great things about the road trips is that, where else are you going to find a business owner who is going to get up on stage and entirely open their books? No question is off limits. And they'll tell you, this is what I paid for it. This is the rehab. This is the loan I got. This is what went right. This is what went wrong. Here, warts and all, and here's the deal.
I mean, you could do it by yourself, but it's a compression of time. What Lifestyles does is that you don't have to go out and recreate the wheel. You get the education, you get the mentoring, you get some of the vendors, the people that have been working successfully with Lifestyles. I mean, it's kind of a platform that a lot of people like and can get plugged in fairly quickly to understand how apartment investing is all about, because there's so much money at risk in these deals that you want to do something that has an educational piece to it, to know what the heck you're getting into and kind of be part of a larger club, organization, platform that has a good reputation, a great reputation in the market.
Yeah, you're exactly right. It's why do something alone when you can hang out with a community of like-minded people? At these road trips, everyone that attends those, and it is, a lot of times 100+ people that are all doing the same thing that you want to do.
So you guys do a little bit of single family, but the majority of the stuff that you do is the multifamily. You guys don't do, well, I guess you do multiple RV parks, but you guys don't invest as a group into mobile home parks, not retail, not office. You are solely focused on the residential real estate piece of the deal.
That is correct. And the reason that we do that is that's where our expertise is. Dell started Lifestyles Unlimited 28 years ago with single family homes. It's evolved into apartments. But when you look at the mentoring, when you look at the mentors, when you look at our operations consultants, I didn't even talk about them. We have 5 people that all come from property management backgrounds. They were all at a multi-site, regional manager type level on staff. Our preferred members have unlimited access to not only the mentors, but also the operations consultants.
So you can pick somebody's brain who's actually been in the business for 10 years and kind of help you, give you kind of the blueprints of how to run. Now you bought it. Now how do you run this property?
Yes, you do not have to reinvent the wheel.
That's so critical.
Yeah.
Properties are living, breathing human beings, but they need to be maintained and taken care of. And a lot of times, what Lifestyles does too, they talk about fair housing and things that can get you in trouble, and just try to avoid things that you're going to have a problem with. So I think those operational consultants are invaluable. And there's not a lot of other companies that have something like that. So I think that's a big strength of what you do. Michael, anything else?
Yeah, just appreciate you coming in. Looking forward to seeing you next week at the Old Capital Conference. Hopefully everyone that listens and wants to learn more about this will come out and see John in person. He'll be there for the networking, and that's one of the values of a group like Lifestyles, and going to their events, or going to an event like the one that Paul and I are going to put on at the Old Capital Conferences is more than the education you get. It's the ability to network and find people that you can either potentially partner up with or passively invest with, or if you're a lead, find passive investors. And the only way people do business with people they know, like, and trust. And the only way they're going to get to do that is if you go to an event like this and get to meet them in person. So certainly appreciate you coming into the podcast today.
If somebody wanted to get some more information from you, I know you go on the website. Is there an email address that somebody can reach out to you?
Sure. It's johnr@luinc.com.
So johnr@luinc.com?
Yes.
So that's fantastic. John, thanks for hanging out with us. We appreciate some of your wisdom and your insight on apartment investing, whether you're a property manager or you are a sponsor or you're a limited partner. So you gave us some great insight and advice. Michael, we'll see you next Thursday, September 13th at AT&T Stadium.
Last call. We won't talk about it again now, so it's good.
Until next year. All right. I'm Paul Peebles. That was Michael Becker. Thanks for listening. Bye-bye.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.